Welcome to Vishal and Company, where Equity Guru's own Vishal Tura, Taku Ndachena, Colin Botrell, and Maddie Grace examine the week's financial events in real terms, bringing the esoteric blur of public market activity into sharp focus. So come in, sit down, put your feet up, and enjoy.
Everybody, and welcome to this week's edition of Vishal and Company. This week, Vishal is going to give us some quick weekly market updates, talk about the chaos in Washington and the market's response or lack thereof. He's going to touch on Bitcoin hitting record highs and Elon Musk now being the richest person on the planet. TK is going to cover if the small cap value premium is real. And we have special guest Galen in today to probably yell a little bit about Tesla. I am the resident not finance person to try and keep these guys in check when or if they start making not a lot of sense for my non-industry friends tuning in. All right, Vishal, take it away.
All right, thanks, Maddie. So what I'll do is I'll do a quick rundown here on the markets because I think there's a lot of discussion to be had with the Tesla stuff, with Bitcoin, and with my 2021 outlook. But we did have, what's being dubbed as chaos in Washington. What was the response? Yesterday, S&P 500, new record highs. NASDAQ, new record highs. Dow Jones, new record highs. And the Russell 2000, new record highs. And in fact, we did make new record highs today as well on all four major U.S. equities. Again, record high versus a record close. So markets really didn't care. You guys know that I like to look at two risk assets, and they are the Volatility Index. So this is the fear indicator telling us whether markets are fearful of an event or of something. And this is the day. This candle right here is the daily candle of the events in Washington. And as you can see, we had a big spike, eventually sold off. Volatility is also now drifting, right? It's not really indicating any more fear left in the markets. But my favorite is actually the 10-year government bonds. And I do look at the bond market because in this asset allocation model, generally funds split money into stocks or bonds, and it's called the risk on and risk off environment. So when things are getting risky and people are fearful of events, they sell stocks and go into bonds. And when there's not much fear, then they'll sell their bonds and go back into stock. So just tracking that money flow is actually very important because a lot of funds, institutions, mutual funds, pension funds, they all follow that asset allocation model. And just a quick reminder, this chart that I'm showing you guys here is the 10-year yield. So this indicates the 10-year yield of the 10-year government bond in the US. It did cross over 1%. And once again, inverse. So when the yield, which is being displayed here on the chart, is going up, it indicates that bonds, the actual physical bond, is being sold off. Look at how the bond market reacted towards the chaos in Washington. Didn't really care at all, was showing us money was leaving bonds when you would expect money to be running into bonds if they were actually fearful or worried about such an event. So really turned out to be what I think one of the CNN guy called a nothing burger. Markets didn't really care. It was just media headlines. And, this is what we do, right? We like to follow the money trails and the money flows, and it'll indicate and tell us what will happen. And of course, we saw some volatility, but not so much. In fact, one of the crazy intraday volatility that I was following on that day was the chart of Bitcoin. Did have a big fall, looked like it was going to reverse, and then it just flew back above. And we're talking, Bitcoin hit 42,000 per coin just today. When we were last chatting before the break, we were looking at Bitcoin, I believe, at 18,000, just under 20K, and we were wondering if it's either going to sell off and fall, or are we going to eventually break out? And boy, did we break out. Doubled in less than a month, couple of weeks, I think it was. So Any opinion, you guys? A lot of people think this is that move into adoption. You guys know my opinion. I just think this is a run out of fiat currency. But is something like this sustainable?
No, not even close.
No?
This is ridiculous, beyond ridiculous. The values being attributed to this, it's based on nothing still. And the volatility, it more than doubled in less than a month, right?
Yep, it's crazy. And just
That's a
yesterday,
little volatile for me. I mean, that's not something I'm going to be basing my fucking currency hopes on. Like, I don't need that.
True.
So yesterday, the crypto market actually surpassed $1 trillion. So just in comparison, the gold market, like the gold market altogether, is valued at just above 7 trillion. So crypto just passed 1 trillion. And, if a lot of people think that this will overtake gold as a safe haven, there would be $6 trillion more to go in order to meet the gold market cap.
I don't know, man.
I'm a non-believer. I'm a non-believer.
I am too. Seriously. I mean, we've already gone to the point of inventing value to begin with, right? The system we already have is very tenuously connected to the real world.
Right.
The Bitcoin concept is like right out there. It has no connection, right? The only way that I think that this is going to be accepted into mainstream adoption is if a central bank takes it, makes it the currency, right?
Right.
Or it gets backed by gold.
Exactly.
True.
Yeah.
Which defeats the whole purpose.
Yeah.
It defeats the decentralization and defeats going away from fiat. It makes it a currency. It makes it a normal currency.
Sure, you get your privacy and your ability to deal without banks, but you also get the idea that there's a reason why you have banks.
True.
It's because that trusted third party actually fucking works. Oops.
So what I'm watching going forward is I'm watching the chart here of Ethereum, right? So Ethereum, is what I hear, from the crypto guys is Bitcoin is the safe haven. It's the store of value, whereas Ethereum is the internet of the money. So Ethereum's the cash, whereas Bitcoin is your safe haven, your gold in this new digital world. So Ethereum here is looking like it wants to test the 1400 zone here. Its all-time highs, I think, was at 1430-ish. So I'm watching this chart here. Again, I'm basing my case out of a run out of fiat. So that's why I think these cryptos might still have some room to go. But I do agree with Galen and TK. I think there is going to be a point where the central banks will have to start paying attention to this. And when they do, there will be regulations, or what I'm hearing, I was listening to a few hedge funds and institutional funds talk about this. What's more likely to happen is there's going to be an unrealized capital gain tax on cryptos. So say you bought your Bitcoin at 20K and you're holding it at the end of the year, it's 42K. That 22K, even though you haven't sold for a profit, you're going to be paying a capital appreciation tax on those unrealized gains. And the hope is it would force people to sell their coins because they have to raise funds to pay for the taxes just for holding the asset itself. So that's looking like it's going to be the most likely outcome. That's what I've been hearing from a lot of the hedge funds and institutional funds. But, I definitely agree with you guys. Central banks will have to start paying attention to this. But just my base case, again, I think there's still some room to go. But obviously, nothing moves up in a straight line forever. We should be seeing some sort of pullback. But just like the equity markets, whenever we see some sort of pullback, it is quickly bought up, and I think it just shows you and highlights the type of mania.
Look at the insanity of that climb. I mean, the pullback has to be just as insane. Don't people realize this?
Exactly. But Galen, okay, so take a look at this chart, guys.
There's your your range right there. Like we've got that where it should be just sort of sitting around, right? I mean, it's maintained that area for quite some time. That's a safe area to be. That other on the right is just. It's insanity.
They call it parabolic.
Yeah. That's another.
But hey, guys, okay, so look at this chart, and I want to bring up this company of that's on the S&P. It's called Tesla. So let's look at the daily chart there, and let's scroll back here. So our good friend Elon Musk, the beginning of the year, he was worth about 27 billion, barely in the top 50 of the richest people in the world list. And now, in the past 12 months, he has gained more wealth than Bill Gates' entire net worth of $132 billion. And we continue to make new highs. We did make new highs. We didn't touch $900. We hit highs of $884.49. Once again, value here is that it's still a growth stock, and eventually they'll pay dividends, but it's technically a growth stock, so it has a lot more to go because they will be selling tons of cars in the future. So, you know, speaking about valuations, what do you guys have to say about this?
This is after a 4-for-1 split, right?
I believe so, yeah.
Oh my
and I
God.
forgot to mention, he's actually the richest man in the world now. He eclipsed Jeff Bezos on Wednesday.
Sorry, somebody has decided to comment on our stream writing backwards. It's interesting. They got Bill Gates in there. What are we talking about? Tesla, and it's the fact that he's the world's richest man, and the fact that he did it never having manufactured a vehicle. I shouldn't say that. That's pretty extreme and actually completely untrue. But as operating as a car manufacturer, he has not. Right, the riches and the wealth and the power and everything that he has right now is derived from investments, playing with the books, and stock manipulation. Has nothing to do with the business he's actually involved in. So I'm a little. So I want to say this.
It's a bit outdated because now the market value, I think, is. By the way, Tesla is also the 5th most valuable company in the States. It eclipsed Facebook yesterday. So I think the market value now is somewhere between 800 billion. So market value of Tesla, 800 billion. The market value of Ford, Honda, BMW, GM, Daimler, Volkswagen, Toyota at 587 billion here. Tesla's revenue, 0.03 trillion. And the revenue of all those other auto manufacturers, 1.1 trillion. Tesla looks like a tulip to me. So, you know, valuations here, guys, versus mania, right? And just like Bitcoin, it just seems like all these dips are being bought up. And, you know, Galen and I and, TK, we talked about this yesterday, and I think it's something important to bring up. If Elon Musk sells some of his shares, because he probably wants to, you know, book a profit now, but if the media reports on Musk selling shares, like just imagine what that would do to the stock price.
People would lose confidence.
Right?
People would lose confidence in it.
Right? So it's just like it's one of those stories.
Stock right now, and without the rainmaker, it would fall right through the floor.
Yeah, it's just
True.
One of those stories. I think you know, next level is I guess $1,000 Tesla. We'll see what happens there.
Well, Michael Burry, as you probably already noted, I mean, he's already shorting the shit out of the company. Shorting the company. So I tend to follow what his. I mean, not that I didn't think already that it was a bit of a travesty, but the fact is that this guy has experience, and he does know what he's talking about. And I think as far as bubbles are concerned, I think he's really good at predicting fallout like that. So
big short investor Michael Burry. Yep. Sorry, Bogdan. Go ahead.
No. Go ahead.
Big short investor Michael Burry predicts Tesla stock will collapse like the housing bubble. Quote, enjoy it while it lasts. End quote.
Yeah. You know, I want to point out something with this guy. It's many people have tried to short, and I think they booked most of the losses at close to 30 to 60 billion dollars has been lost by hedge funds trying to short. And then they had collateral margin calls and stuff because Tesla went up 600% in a couple months. Michael Burry shorted the housing market. That is backed, quote unquote, backed by the U.S. government. And he did this from 2005 until 2008. So it's like, if he's shorting now, he's willing to wait a long time until. So it's like a temperament thing. If he's in it now, it might be the next 3, 4, 5 years when it might happen. But he's like he's making a bet in the long term that over time there's a correlation between earning power and valuation of a stock. The sentiment can only drive it to a certain point until the market realizes, oh wow, Tesla can't continue to grow at 50% when it has an 800 billion market cap. Not even Amazon does that.
Well, let me share with you this crazy statistic that Michael Burry shared. Tesla stock price jumped 8% on, I think it was on Thursday, that day alone, adding 60 billion to its market capitalization, which is equivalent to 1 General Motors, 2 Hershey's, 3 Etsy's, 4 Domino's, and 10 Vornado's. I'm not familiar with this Vornado's company, but in one day it eclipsed the equivalent of those companies' entire market caps or market values.
That's hilarious. No, go ahead.
Can you explain why? Like, why?
Well, that's the
Hey, I've been trying to figure it out for the last 2, 3, 4 years. But just yesterday, I was just looking at the rundown of most, and I kind of go through the big five, the FANG, and FANG T, I guess at this point, with Tesla added in there, and Tesla just broke even, and now they're actually making more cash than they're letting out to grow. So their cash flow is higher than their capital expenditures for one year. It's not much to speak home about, but obviously the market has reacted to that, and for them to continue doing that to justify this valuation, people are expecting them to grow rapidly for an infinite amount of time.
And that's not going to happen because Toyota, one of the biggest competitors in the space of just making vehicles, made 8.8 million cars. So that, you're never going to.
It's like how much of the EV market is there to begin with?
Yep.
It's an untested market compared to the actual automobile industry market, auto market that's already there, and people are assuming Tesla's gonna at least hold close to 50% of that market by 2026 or something like that. I think was the consensus, and that's outrageous. That let alone Ford doesn't own 11% of the market share.
Basically, just to answer your question, Maddie, like all rationality is out the window. This is just irrational exuberance, but I think it's not just Tesla, right? We've sort of talked about this with other equity markets.
Is this just cheap money? Is this just cheap money?
You have to go somewhere for yield. Right? People are expecting more central bank money printing. People are expecting more fiscal policies, especially now, you have the Democrats with the Senate and stuff. More money will be spent that way. So you have to preserve your purchasing power. You have to beat the rate of inflation. And markets are really the only place to go. And a lot of people make the case, too, with Bitcoin, right? Bitcoin, for some reason, looked relatively cheap at 20K compared to everything else. And the added bonus is if you're in Bitcoin, you're not holding a currency that can be manipulated by the central banks or through the government with really bad money spending, right? So there's this irrational exuberance, going around around the world, basically. And I mentioned this. I called it the confidence crisis. We're seeing the confidence crisis in central banks and fiat currency. And the last piece of the puzzle was the confidence crisis in government. And I think we started to see that, I would say in 2016, but I think it hit a lot of people, just a few days ago. So, that's what I see, right? I see this as a confidence crisis, and people are going to be running, out of fiat because they can foresee what's going to come in terms of government and central bank policy. But just quick segue, just before that, I did 3 posts on Equity Guru during our Christmas week. And I wanted to basically do like an outlook of 2021. I do recommend you guys to go and check these posts out. One was about gold. One is about the 10-year yield and also agricultures. But just quickly on gold, let's just do a little tease here because I do want people to go and read that article. This pattern here, you can see I still have some of the arrows marked here. This triangle or a wedge pattern, very similar to what happened in 2008 after we made all-time record highs. And this same pattern is repeating itself. And when we saw that pattern in gold, we had a 180% move in gold. So the fundamentals and the technicals line up. We're just waiting for that weekly break, and 180% move in gold would actually take it closer to $5,000 an ounce. Not saying that happens in a month or two. It took 400 days for this move to happen. So that would take us in, a year, right? Just above a year. So, technicals, fundamentals line up. This is what I'm looking forward to for 2021 in the gold market. I did cover already the 10-year yield, but this is the weekly chart. We, funnily enough, I was talking about watch the yield to go over 1% as the central bank currency war heats up, and we've actually already broken above 1%. So this trend is already well on its way. But the one I like to talk about just a bit more, because I think it would have your guys' output on this. We like to look at things that not many people are talking about. And I think agriculture, food, is something that not many people want to look at, right? They'd rather look at Tesla and Bitcoin and tech. But I like to look at these hard assets, right? Well, I guess it would be a hard asset. Something that's tangible that you can touch. I like to trade corn, wheat, and soybeans. It's not very popular with traders, but the charts here are indicating big moves in corn, in agriculture, in wheat, and in soybeans. Soy became very popular because of the U.S.-China trade deal. Part of the Chinese trade deal was that they would buy more soy from the U.S. But two things to look forward to, right? A lot of people are saying COVID, it's going to destroy supply chains. In fact, Canada actually said that Canadian families are going to pay up to $695 extra for food next year, so for 2021, due to the pandemic and wildfires and stuff. We'll get to that because that's the second aspect, and that is climate change, right? Weather becomes unpredictable. We've seen a storm wipe out all the crops in Iowa, which is where almost 90% of America's wheat and I believe corn is basically, grown. And that took a lot of supply off the market, which actually created these large spikes in the. Also, I'm looking at natural gas, but which created these large spikes here in corn and wheat and even soy here. So I think it's something, not many people are looking at. The charts look really good. The fundamentals look really good. I know a few farmers on the East Coast, and generally what farmers do is they like to, plant their crops in spring. And what they wait for is they wait for the bird calls, right? Generally, when the birds are coming back to the land, that's your sign that spring is coming. So it's getting ready to plant your crops. But what we've seen on the East Coast is the winters have actually remained and lingered longer. So you have a longer winter and you have a shorter spring. And that's causing a lot of issues on the East Coast with the farmers. And, that's something I'm watching. A lot of it, don't worry, it can be alleviated very quickly. We can do indoor, farming, greenhouse farming, and all that kind of stuff. But it's just obviously that's a trend that I'm looking forward to. So I think agricultures are going to have a big year this year. It's not going to be good for our wallets, but if you want to invest in it, I think there's definitely an opportunity there. And just looking forward, pandemic, supply chains, and then climate change, right? That's, I think, two things that not people are looking at. And I think it's definitely something you should put on your radar. But that's it for me for this week.
Awesome.
We did get a comment. I don't know if anyone wants to respond to this. That says central pump fiat till it pops, but claim they're dumping it. So the people sell and they take back whatever they can scrape back up.
Yep, I mean, I see something like that too, and that's what I'm worried about. I think they're getting too many people here in, equities and assets, and then eventually they will pop it, right? There will be, it's a term I've used called the cuckening. There will be a turn where this all falls down, basically it tumbles over, And unfortunately, a lot of people in the middle class who have investments in mutual funds and in pensions, retirements, they cannot make money when markets fall, right? The only people that can make money or shorts on markets or take shorts on markets are institutions, large funds, and people like me, right? The retail trader. And you're going to see it will be the largest wealth transfer in history, because wealth is never destroyed, it is only transferred. So all these people with retirements and pensions, etc., they're going to see all their wealth disappear, and it's unfortunately going to go to, well, I'm trying to warn you guys, so hopefully you'll be on the fortunate side, but it will go to people like us who, sort of know what's going. But that's my game plan. I think that's going to happen. I just personally think we go to negative interest rates before that, because that's what they can do to try to keep this going longer, right? And that's sort of been my warning, as a financial guy. I know a lot of people are worried about COVID and coronavirus, but I think the fiscal and the monetary responses to COVID are actually much more dangerous are going to be much more deadly in the future, in the long term, than the virus itself. And that's what a lot of market people have been warning about, right? That there really is no turning back now to cheap money and easy money. Money has to be printed. And yeah, I agree with the the comment there, because it will happen. And that's sort of been my base case for cryptos and gold and silver, and why you want to sort of be in these hard assets. It's just we can't time it. But personally, I just think central banks, and again, I refer to this in this article, the central bank currency war, they are going to attempt to weaken their currency even more, which will mean stocks will continue higher and other assets will continue higher, until they're ready, or until the bubble pops, right? Until something happens with the system and we see that rollover, right? Because this type of movement, I don't know if it's sustainable. I still think we're going to see things get a bit more crazier. Like, we're going to see prices that a lot of people have never expected to see. But we can say the same thing about Bitcoin, right? I don't think many of us were expecting Bitcoin to hit 40K.
Not at all.
This high, this quickly, right? So
not at all.
Yeah. Yeah. But don't
All
worry.
right, I am going to pass it on to TK, and as usual, giving you a time frame.
No worries.
4 minutes.
I'm actually gonna look at the Canadian market for a bit. Separate from the US for a couple seconds to actually see what's happening up here in the cold north. It's more of touching on what Vishal was saying on the value versus growth.
We made new highs.
Oh, wait, what test?
TSX Canadian markets made all-time record highs.
Oh my God, there we go. I think people are moving cyclically to something more sustainable, and that's where the argument that value has underperformed for the last decade. And I want to talk more about the value premium, specifically small cap value premium. So there are these two academics, economists by trade. I don't know why economists love studying the market so much when they're terrible investors themselves. But they posed a theory that over time, value stocks that trade at a low price to book or low price to earnings or have a high dividend yield outperform high growth stocks like Tesla with high earnings, price to earnings, high price to book, and low dividends to zero dividends. Over time, the value stocks outperform the growth stocks. And then when you look at the Canadian market, most of the Canadian stocks are defined as value stocks just because of the nature of the industries they're in. So if we take a look at the TSX, 30% of the TSX is in financials, another 13% is in energy and materials, another 11%, and only 11% is in information technology, which is most of the growth, where most of the growth stocks are in. And that's the large cap one. With the small caps, he posed that small cap stocks with a quality of value outperform large cap stocks with a quality of value as well. and this is the small cap premium. So looking at those two things, I was like, okay, the nerd in me was like, let me look at the trend of what the TSX large cap and the TSX small cap have done in recently. And if you go to the returns on the slide,
There we go.
there we go. So these are the annual returns from 2006 to 2020. I think 2020 in June. And I use two indexes here. I use the XCS, which is for the small caps, and the XIU is for the larger caps. And there are three distinct moments here. There's 2008, not 2006. When the market was in a complete collapse, both underperformed, but the small caps, which are more exposed to risk, did worse. But the next year, straight after that collapse, the value stocks and the small cap stocks outperformed the larger cap stocks. And then, as time went by, the Canadian market did its best thing. It did nothing for close to 10 years after that. But that's just because a lot of the companies do lean on the side of tangible assets. There's not, outside of Shopify, we don't have much going on in the Canadian market when it comes to tech. So this is now, you're probably wondering, what does this all have to do with, the current market we're in? And my general consensus is that the Canadian market is relatively cheaper than the US market. That is not to say there's no value in the US market. It's just you would have a higher rate of return by digging deep into what the Canadian market is doing. So some of the financials, for example, or the energy sector, or even going into consumer discretionary, if you really wanted to, there are performers in there that are on aggregate doing better than some of the American stocks. So actually recently I noticed this week, institutions are buying up banks again, but US banks. So companies like Wells Fargo had like a 7% jump in one day and stuff like that. But
the US bank index is about to break out to all-time highs
as well. So people are cyclically moving into more of these value plays. And this is now a personal thing, I feel the deeper the discount you buy at, the lower the risk over an extended period of time. And if the Canadian market is generally trading at a deeper discount than the US market, you're better off in a 2 to 3 year period looking at the Canadian market. Although there's less companies to look at, there are also less people looking at the market. So there are more price inefficiencies. There's a difference between the price and value gap in Canada compared to the US. And most people would be better off right now with current conditions in the US with the president-elect coming in and all the treasury with the stimulus checks coming through and all the easy money that's flowing into the economy. It would be easier to find value in the Canadian market because less people are looking at it and it has traded at a discount compared to the US. And it's shown that both markets return about 9% in a long period of time, close to 20, 30 years. And it makes more sense to buy something at 15, get a 10% in return at 20 than it is to buy something at 20 and get a 15 and get 9% in the same period. The two sound the same quantitative wise, but they're two different purchases completely. And it kind of shows you that there is still a value premium for selecting companies that trade lower than the market. And the biggest one that I do want to look at is Scotiabank. For myself, is a personal one that I think I want to look at. And what is the other? Motorola as well. Yeah, although not Motorola, sorry, BlackBerry. BlackBerry is another one. Vishal probably has more to say about BlackBerry than I do. But it's another one that not a lot of people look at.
Disclaimer, I own the stock of BlackBerry. So.
Exactly. But yeah, it's just you kind of have to find pockets of value now because there are way more intelligent people looking at the market than before. So the biggest argument that people have against the growth and value thing is there are many acclaimed value investors and many acclaimed growth investors, and there's a lot of intelligent people scouring through the markets to find value. But when they say that, it's always kind of good to remember these studies are mostly done in the US. So there's a lot of mispricing in specifically the Canadian small cap value space. So yeah, that's where we should go hunting from now on.
Well, I'm just showing my viewers the chart of the XCS, which is the small cap index, right?
Small caps.
Compared to the all-time highs of the TSX. Look how much room is left to test all-time highs on the small caps.
On the small caps.
So we sort of talked about this, the hunt for yield. If American markets and equities are making all-time highs, okay, the TSX now is about to make all-time highs. And me personally, I've been looking actually. I went long the Spanish markets in Spain because look at Spain, right? Look at the European markets. Are they technically undervalued, right, compared to assets, American markets,
elsewhere,
or Asian markets, right? Look at the UK FTSE. It just broke out, major breakout here, and a lot of room to go. The only European market that is actually making record highs is the German DAX, and it basically took a long time to join the party. Just broke out yesterday, so. This hunt for yield is now going global.
True. You kind of have to expand your horizon. I think the greatest benefit that we have as retail investors is our ability to have a wider universe than the institutional guys. They are limited by regulation to invest above a certain market cap. Mm-hmm. So that does create mispricings in certain stocks. The biggest ones I've noticed in Canada, obviously, is the junior miners. But that's just because mining is a really complicated industry to understand. I feel like most of the people who run the companies don't even understand what they do. Yeah, that's my piece for the day.
Awesome. I'm going to give Galen the last word.
Oh my God. It's a strange world. I honestly think we're heading for an economic reset, but and it's not the Great Reset. Please don't start doing that conspiracy thing. I think that honestly we're heading towards a new type of economics. We've carried ourselves as far as we can, and it just makes sense, right? It's not a forever system. With evolution, there was never any sort of going up the ladder. You know what I mean? Like, it wasn't forced. Everything we evolved to wasn't better, right?
Yeah.
So it doesn't mean that capitalism is a highly evolutionized
system of economics.
Yeah, I mean, it is, comparatively speaking, sort of, but it doesn't mean it's the end, right? There's more that we can draw from. There's things that we can actually return back into the system. I'm heavy into the idea of stakeholder economics. I'm heavy into the idea of removing interest.
True.
I mean, it's really just something that's based on nothing, right? And it only helps stuff like we're watching, right, with the NASDAQ and all that shit. It's just...
That's true.
And to back up your claim, Galen, fiat currencies, they have... Basically, no fiat regime has ever survived, right? I think the cycle is usually 40 years, but this cycle that we're in is actually pushing close to 50 years from 1971. So, we generally in human history have seen fiat cycles collapse, and then humans have generally gone back to a hard money system, right? A gold-backed currency system, right? So a lot of people are seeing this now as a repeat of that, and we're at the end of, as Galen just mentioned,
the prolonged cycle.
Yeah. This fiat cycle.
That's true.
Be interesting.
Yeah, it's interesting.
If value becomes a reputation thing again. You know what
I mean? Yeah. Mm-hmm. Wonder what kind of economics will happen after that.
Yeah, that's funny. We just had another comment from somebody who's been watching the show saying, this is a fellow person, I should say, I shouldn't assume fellow, person going by the name of KK, saying that the US dollar 50-year experiment has come to an end. And I think it has, along with the hegemony. Right? I mean, it's a shifting of power. You're talking about the Thucydides. I always get the wrong.
Thucydides trap?
Thucydides trap? Man, oh man, I can never say that right. But yeah, it's. I think we've hit that point, that juncture.
Yep. And a lot of people do mention that with the dollar here, and basically the way we rectified this, like there was a dollar crisis in the late 80s, and basically we did the Plaza Accord where the dollar was actually devalued by 40%. But the big difference was the reason why they did that devalue back then was because the dollar was actually moving higher, not collapsing lower. It was actually moving higher, which forced all the countries basically ganged up and said, hey, we can't work with the dollar system here. And the Americans had to basically overnight devalue the dollar by 40%. But this time, like we just said, we're already seeing this fall here in the dollar. And, once again, I'm just going to keep mentioning this, but it is the currency war. We're in a process now where all central banks are trying to weaken their currency to try to boost exports and inflation numbers due to what COVID's done to the economy.
We're already massaging a dead system.
Yeah.
Right? The COVID just kind of drove the stake through the heart.
Yep.
Right? It was already on its last legs. We just had a wonderful comment from this KK who has been watching, saying that they really enjoy our shows and say that they're insightful.
Thank you.
I'm flattered. Thank you, because I
Thank
usually
you.
just babble and say stupid stuff. Yeah.
You're not alone.
I'm glad that you find it informative. That makes me feel so much better.
Amazing. I'm cutting it off on that cheery note.
Cool.
Thank you to everyone for tuning in and for Galen for joining us today, and we will see you next week.
Absolutely. Bye, everybody.